Welcome back to the channel. Today we're looking at DAM Capital Advisors Limited, a niche but powerful player in India's investment banking and capital markets space. The stock is trading around 210 and is sitting right near its 52-week low. Now the big question, is this a warning sign or an early value opportunity? Let's find out. DAM Capital Advisors is not your typical finance company. It's a full-fledged investment bank that works behind the scenes with India's mid and large corporates. They handle everything from IPOs, QIPs, and rights issues to mergers, acquisitions, debt solutions, and institutional equity research. Think of them as the strategic team that helps businesses raise capital, expand, acquire others, or go public. Their performance moves directly with market cycles. When markets rise, revenues shoot up. When markets cool off, earnings tighten. Over the last few quarters, the momentum has started to improve. India's equity markets are strong again, deal-making is returning, and institutional activity is picking up. Their transaction pipeline, which was earlier muted, is now getting healthier. We're seeing better revenue visibility, improving advisory activity, steady growth in research revenues, and most importantly, a revival in equity capital markets. Since DAM operates an asset-light model, even a slight pickup in deals can lead to a strong boost in margins. So what makes DAM Capital stand out? They have deep institutional relationships built over years and a strong foothold in the mid-market investment banking segment, an area less crowded than large-cap players. Their low fixed cost model means the upside can be huge during bull cycles. Over time, they've also built a reputation for executing IPOs and advisory deals efficiently and consistently. But every investment comes with risk. DAM's business is extremely cyclical. If markets dip, deal flow can dry up. Delays in regulatory approvals or SEBI changes can affect activity. Mergers and acquisitions often face long wait times, and competition from both domestic and international banks remains intense. On the technical side, the stock is now hovering around 210, almost exactly near its 52-week low of 205. This level usually represents either heavy pessimism or quiet accumulation by smart money. Support sits around 205 to 215. A breakout above 245 could signal strength returning. For now, the trend seems sideways to weak, but the valuation looks attractive for patient investors. For short-term traders, entries make sense only above 245, with targets around 262 and 278 and a stop loss near 200. Long-term investors can consider accumulating between 205 and 225 for potential targets around 310, 350, and 380, assuming market cycles stay supportive. The risk-reward here appears favorable if you're willing to hold through volatility. So to wrap up, DAM Capital Advisors is a cyclical financial stock currently near its lowest levels in a year. If India's capital markets continue to strengthen, this company could benefit disproportionately thanks to its scalable, asset-light business model. It's a value plus recovery story for those with patience and conviction. Always do your own research before investing. And don't forget to like, share, and subscribe for more market insights.